Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. So, in September, October and November last year, a few bullish patterns started to emerge. The mid-September action eventually became a pattern, an ascending scallop pattern, that led to another pattern, an early October to mid-November bullish halfway hesitation, which in turn led to the late October to date imperfect, breached, now broken bull channel, currently 186.30 to 202.25, which is highlighted in dark blue on my daily chart. I suspect the breaking of this bull channel was due to the crossover 8 weeks ago of the upper bull channel line, with the significant neckline, currently at 184.20, of the large January 2020 to April 2021 reverse head and shoulders bottom that is highlighted in green on my daily chart. Now, the break higher over the upper bull channel line eventually led to a move up towards the combined resistance in mid-December of the November 2014 high at 201.35 and the 50% Fibonacci line of the February 2022 to January 2023 move at 201.70. Though I suppose you could also throw in the bright orange declining neckline, currently at 202.90, of the April to May 2022 reverse head and shoulders pattern. Between them all, the market halted its rise and turned back down, though the bull channel and eventually, moved down through the bull channel and eventually stopping down at the combination of the 50% Fibonacci line of the May 2019 to February 22 move at 174 even. And the August 2021 low at 174.5 in the middle of January. In the process, prices filled in a gap left behind in late November last year between 173.20 to 173.55. We've since moved up just over the congestion between 187.40 to 187 even, and just over the broken lower bull channel line. All this action has allowed me to draw a bright pink November 2023 to January 2024 bullish Andrews pitchfork. The market is currently in between the lower time below, currently at 177.95, and the middle time above, currently at 198.35, though I'm moving towards testing down the lower bull channel line at the moment. Well, so what's next? Well, we could see the market follow this pitchfork higher, which would be fine. But I just wish to make you aware that the action since late November last year has also set up the possibility of a head and shoulders top. If the market chooses to go down this route, then we are in the final stages of forming the second shoulder, with a neckline synonymous with the purple coloured 50% Fibonacci line of the May 2019 to February 22 move at 174.01. This is a key level to watch, especially on any significant confirmed break lower. London coffee. Now, the influential pattern here from the middle of 2023 until really November/December 2023 was the June to December 2023 bear channel. Attempts to break up and out of this pattern happened as far back as late October 2023, but the real push higher happened in mid-November, with the market utilizing, to varying degrees, the rising short medium moving average currently 27.76, the long moving average currently at 25.64, and especially the medium moving average currently at 2600. In the process of breaking higher, the market also formed a small, late October to date, ascending triangle. At the start of December 2023, the market broke up and out of this pattern, somewhat violently. In the process, prices jumped up and reached the primary target for this break higher at 27.91 and eventually the secondary target X2 That's the harder to reach target, and that's at 28.78. Then there was the second larger pattern, the original broken bear channel in green, which had been in green, which I've actually just watered down because it's gone beyond the market at the moment. 7 weeks ago, I laid out some topside targets for a break of this pattern, and I quote, "Thus, we have a primary target X in the 26.88 area and a secondary harder to reach target X1 in the 28.38 area." End of quote. Well, both the primary and the secondary targets for the bear channel were also reached, in the process making new all-time highs. When I last spoke, I also laid out the following on the top side, and I quote, "When I do look higher, I can see a projected 50% Fibonacci line at 30.83, which may be a little too rich for some in the market." End of quote. Well, apparently this was not too rich, as after a pullback lower at the end of December, which turned out to be a bullish halfway hesitation in the end, well, 2 weeks ago prices reached the 50% projected Fibonacci line at 30.83, and then some. All this action allowed me to now draw a mid-November 2023 to early January 2024 bullish Andrews picture, which you can see highlighted in dark blue on my daily chart. The market is at the moment in between the lower time below, currently at 30.60, and the middle time above, currently at 32.27. Now, this pitchfork is far narrower than the one in New York coffee. So it would not surprise you to consider that it may be the first to possibly be amended to a bullish shift pitchfork, or even become disregarded altogether. However, until that happens, this is the main pattern running the market. I also note above the market the 100% projected Fibonacci line at 33.71. Now, one interesting final point, there is no chance at the moment of a head and shoulders pattern here, either a continuation or as a topping action. This is the key difference between the London contract and the New York contract, and it's quite important.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.